Hey everyone, join us today for a one-on-one conversation talking all things BTC, finally at long last reaching 100,000. And what happens next for Bitcoin is Gil Luria. Gil is head of technology research at DA Davidson, has been talking about this for many, many years, quite some time. Gil, I appreciate your time today.
Yeah, thanks for having me.
So your very first sell-side report, December 2013, that's 11 years ago, Gil, all things Bitcoin. What was your message then on BTC, and has that message changed 11 years later?
The message back then was that people should take it seriously. Bitcoin represented a major breakthrough in technology. And it's become a lot more since then, but at its very basis, it's a revolution in technology. And I wanted people then to take it seriously. And in fact, that's been my message ever since. And even today, it still is, because even 11 years after that, or frankly, 15 years after Bitcoin started, people are still asking the same questions about, is this real? Is there intrinsic value? Is the government just going to shut it down? Very, at this point, naive questions that were answered a long time ago. But that's okay. People are still asking those questions. And so we're trying to help mostly investors wrap their head around what's real, what's not real. The technology, the breakthrough in economic theory, in computer science, the cultural implications. But mostly, we still want people to take it seriously, because I think that leads folks to better investing and understanding the context for investing in both crypto assets and other assets.
So you did this report in December of 2013. Do you remember, can you walk me through kind of how you were first introduced to it? I assume it was, at latest earlier on that year. And what were your initial thoughts that led you to publish what you did so early on?
Yeah. So I had a couple of colleagues that were hounding me about it, and I kept dismissing them and telling them, this isn't real. This isn't serious. Again, I give myself a pass because this was 11 years ago. And then I met Brock Pierce, who is a fantastically good advocate for crypto, a fantastically good investor as well. And he sat for an hour and very patiently walked me through all those points of resistance and made me really reconsider my perspective. Went back to my desk and downloaded the Bitcoin white paper, the one authored. It's a 9-page paper by the pseudonymous Satoshi Nakamoto. And I read it, and that's all it took. If you just sit down and take the patience to read those 9 pages, you can understand that there's a real breakthrough there. Again, with all the noise and the good actors and the bad actors, just sitting down and reading that paper, you can understand that there was a breakthrough, which led to the software that runs the network that we now use. But I'm just glad I was open-minded enough to have that conversation with Brock, to read the white paper, because it's led to this wild ride.
Yeah, Brock Pierce has been a tremendous advocate for the space. People may know him from his acting career in films like Mighty Ducks and things like that. But he has been bullish all the way through. So to that point, you mentioned the white paper. I have to ask before we get deeper in the conversation, did you catch the documentary Money Electric that came out just a month or two ago? Obviously, part of what the documentary filmmaker sought out was to identify kind of the origins of Bitcoin. Who is the mysterious figure? And I'm curious your thoughts if you did catch it.
I'd rather not know. I think it's much more romantic to not know who Satoshi Nakamoto is. It's something that has been bestowed upon us. My guess, likely actually by a group of cypherpunks. And I appreciate what they did, because the revolution they introduced, I think long term will have very profoundly positive implications on society. And so I just rather not know, not put them in the spotlight. They clearly don't want to be in the spotlight. Hopefully they hung on to some of that Bitcoin and they're exceedingly wealthy right now. And I don't really want to know who Satoshi is.
Totally fair. And I think a lot of people feel similarly. Are there any concerns, though, that if we don't know who this person or these group of people are, that as the inherent store of value of Bitcoin continues to rise exponentially, that there is some still mysterious figure or individuals that have this now enormous outsized wealth and perhaps influence over the whole space, and we still don't know who those people are. Do you have any of those concerns that many have shared?
I think it's a tail risk at this point. Um, if they sold into the market, that would put some temporary pressure on the price of the asset. Obviously, if they have some secret key to change the network, that would be a very bad outcome. Every day that passes, and again, we're 15 years in, that becomes less and less likely, especially considering they did it for ideological reasons and they must be thrilled with where Bitcoin is now. So it just seems less and less likely over time that they would do something like that. There are Bitcoin administrators. They have a lot of power. The Bitcoin network isn't perfect, but it stood the test of time. It has not, knock on wood, it's not been broken in 15 years, and you better believe everybody's been trying. And so we're at a point where it's probably the safest network for transmitting value that we've ever had. And every day that passes, it makes it safer and safer.
You and I were having this conversation a day after Paul Atkins was named by President-elect Trump to succeed Gary Gensler at the SEC. We talk a lot about it in our interviews here at Public, the long-running frustration with the Gensler-led SEC in terms of being able to define, what is a security, what is a commodity, what are the rules of the road? What are your thoughts on the selection, once again, of Atkins? And how do you think maybe a more crypto-friendly federal government might mean in terms of Bitcoin prices? What will it mean for BTC, you think?
This could be the watershed moment in terms of the development of crypto asset-led financial system. I think there's a potential for it to be that big of a deal. Let me explain a little bit. I hold no grudge for previous regulator, including Mr. Gensler. Their job is to protect individual investors. That is a very important job. The way they've chosen to do that is by not having regulatory clarity, letting behavior play out, and then identifying what they consider bad behavior and persecuting that. That is their way to protect individual investors. They had no malice. I work with folks at the SEC and FINRA all the time. There is no malice. There's no malice towards crypto. There's no malice towards anybody involved. That is the strategy they have pursued to protect individual investors. Having said that, that strategy has stifled innovation. We had some great waves of innovation, one in 2017 and one in 2021, where we really saw where this is headed in terms of developing new financial services that are built around decentralized network in a way that could really revolutionize the financial system and make it far more efficient and accessible. But those innovations were stifled, to your point, by the fact that there wasn't clear regulation about what these assets are, how they should be regulated, how they should be distributed to individual investors. If we indeed do get an SEC chair who is crypto friendly, who is open to drawing up that regulation that Congress would have to approve that would give us the guidelines for crypto asset companies to know what's legal, what's not legal, and have confidence that those guidelines would stay, we will be a lot closer to getting to that world where most, if not all, of financial services are delivered on a distributed, decentralized ledger, which again would cause very broad benefits to society, to the economy, and are therefore worth pursuing. And I hope that's going to be the case.
We're coming up on about a year or so since we did finally get approval of, I think originally it was 11 spot Bitcoin ETFs. What has that done from your viewpoint in terms of volume, in terms of institutional interest, and in terms of maybe encouraging once more skeptical investors to say, all right, I can have some skin in the game here without necessarily going through the whole process of a wallet and owning underlying tokens?
Yeah, so the story of Bitcoin, the asset, and the asset price is a story of adoption, right? Fixed supply, right? So we're not going to issue any more Bitcoin. So the price is really we are going to issue, but only to the limit of 21 million, right? So the story of the price is entirely the story of how many people are buying into Bitcoin, figuratively and literally, and how much are they buying into Bitcoin, figuratively and literally. And so that is a function of how many people have access to it. Now, I was comfortable opening a wallet back in 2013 because I knew the people. I learned about it. It was an area of focus for me. And so I was willing to do that. Hundreds of millions of people were willing to do that. But there's hundreds of millions of other people that were not comfortable opening a new service, a new financial service, somewhere they can put their money that they don't otherwise work at, that there's no branch. There's a whole group of hundreds of millions, if not billions of people that are in that category. Now, what they do have, many of them, not all of them, many of them, is a brokerage account where they hold stocks. And so it was the availability of ETFs just made it possible for those folks that bought into the Bitcoin vision, but didn't want to open up a separate account. Even if it was Coinbase or Robinhood or Square, they didn't want to open that separate account. They wanted to hold in their brokerage. It made it available to them, and that was critical for increasing the adoption to date. So it's that simple. Bitcoin is about adoption. As adoption goes up, as it becomes more accessible to different types of investors with different risk tolerances and different digital comfort levels, the price of the asset goes up. Now, institutional is a very different question. Institutional is the adoption has come in waves that somewhat correspond to the waves of asset prices, but not entirely. It also has to do with the fact that the folks working at institutions, hedge funds, etc., are getting younger. They got comfortable with crypto assets earlier. They got comfortable with digital tools earlier. And so as they have positions of more prominence within these institutional investors, they have more of a say about how those institutions are getting involved. But that's a very gradual process. That's a multi-decade process. We've made some progress. Some institutions are interested, involved, on the ownership side, as opposed to just the brokerage side, just facilitation side. But that process should continue, especially every time we get a new wave of activity, new innovation. And again, those more digital natives are coming into more positions of prominence at those institutions.
Gil, are you in favor of the idea of a strategic reserve, as has been talked about by Donald Trump and other Senate Republicans? And if so, what would that even look like?
It's a very interesting question in the following manner, right? When I think of the value of Bitcoin, right, there's a lot of levels to it. There's the ascending uncorrelated asset class, replacing gold. There's Bitcoin as a payment network, as a medium of exchange where you can send money, you can buy things with it. And then there's that overall promise, the long-term promise that Bitcoin could become all of money. We could replace our entire monetary system on a global base with Bitcoin. Now, if you asked me 11 years ago how likely that was, I would have probably said 0.001%. If you ask me how likely that is now, I'd say 1 or 2% chance that happens. The path to that happening is very broad adoption by governments and corporations in their treasury function. Right now, the United States Treasury, sovereign treasuries, corporate treasuries, they don't just own one currency, right? To the extent that they do global business, which most large companies and governments do, they own US dollar, they own euro, they own yen, they own yuan, they own Swiss franc, whatever else they own. That's fairly inefficient to own all those different, because you're sitting on an unappreciating asset, but you're doing it to facilitate global trade and transactions. We could all replace that with Bitcoin. That is the grand vision. Again, there's a 98 to 99% likelihood that we don't, but there's a chance that we do. And a step in that direction would be more countries doing what El Salvador did, what MicroStrategy did, what Tesla did at some point, which is to put Bitcoin in treasury with the notion that it could help facilitate global trade. So I don't know that I have an opinion whether the United States government should or shouldn't do it, but it would be a very big step. I would increase the likelihood from 2% to 10% if the United States did that.
Okay, well, we certainly got Republican senators, Cynthia Lummis and others, Republican from Wyoming. I mean, they're going to have new bills coming up in this new Congress, so it's going to be a fascinating conversation. So, okay, so right now you pin in. That's fascinating, man. 1 to 2%, not as a complement to fiat currencies, but as a replacement altogether. How about the relationship to gold? Complementing gold, replacing gold, and kind of your thoughts as we tend to compare gold and Bitcoin frequently.
Yeah, it's replacing gold. It's a gradual process, but clearly it has all the positive features of gold as a store of value, but it's far more liquid, far easier to move around, far easier to own in various ways that give you the actual control of the ownership stake as opposed to owning a piece of GLD, which is, the distance between you owning a piece of GLD and you owning the physical gold. It probably has many, many steps along the way. Push comes to shove, you're not going to be able to hold on to that gold coin. Where with Bitcoin, you always have the option of having the key. If you have the key, you have the value. And it's been a gradual process of investors wrapping their head around that, but it's happening. Clearly, gold is appreciated, but Bitcoin is appreciated far faster and is catching up to gold in terms of the overall value. And it's, again, as more and more digital natives have wealth to preserve, I would expect that shift to continue.
Every great bull market's followed by a bear market. Every great rally eventually has a pullback. As we're having this conversation with Bitcoin finally reaching 100,000, how do you think investors should think about cycles, especially for something as volatile as Bitcoin?
Yeah, that adoption comes in waves. We've now seen that many times, at least 4 or 5 times. We've seen there's a big wave of adoption. Everybody buys into it. Once that wave crests, there's a collapse in the asset price. The crypto winters have lasted longer than crypto summers, and they've often been at a 60 to 80% decline from the peak of the crypto summer. Folks that started buying early have now and have held on. Now know that that's the pattern. New folks sometimes get confused about that. But that's just the nature of how the asset price appreciates. It's waves of adoptions. This is very word of mouth based adoption. Nobody's marketing Bitcoin, right? Apart from Michael Saylor, nobody's marketing Bitcoin. Bitcoin is not a commercial entity. And so it's word of mouth that helps adoption grow. Again, it's access that helps adoption grow. But once a wave is complete, the asset price will collapse again until the next wave comes. And that's been the pattern, and that's likely to continue to be the pattern.
Absolutely. So far as, of course, if you have a private key, if you're lucky enough to have one, of course, don't lose that private key because you don't want to lose access. Okay, awesome. While I still have you here, what part of the Bitcoin story overall do you think we should be talking more about, Gil?
But I think it's that big piece. I think it's that big vision. There's been true believers throughout, but I think folks are still skeptical. Again, I'm 98% skeptical, but we do need to wrap our heads around the fact that if we were to design a society from scratch, a monetary system from scratch, we would have picked something that looked like Bitcoin for the monetary system. We wouldn't have picked the dollar, the gold, or anything else. It has all the features that would allow us to have a global economy that's more fluid, more efficient, more real time, with much less friction on transactions and transaction costs. And so it is interesting to follow the plot of whether or not we get there.
And actually, finally, I'd love to ask you about the MicroStrategy component about this. MicroStrategy stock is up more than 500% year to date amid Bitcoin's massive rally. Is there a risk? Do you see it more as opportunity? And what do you think someone listening should know about the relationship there?
Yeah, that I mean, it's a leveraged bet on Bitcoin. It's accessible because it's an individual ticker. It's under a guise of an operating company. There is a little bit of a software company somewhere hidden in there, uh, but buyer beware. The value of leveraged Bitcoin is the value of leveraged Bitcoin. So just do the math of what you own and make sure that if the MSTR is trading at a higher value than the value of levered Bitcoin, then maybe that gap would close over time. And the ability to own Bitcoin in many other different ways, including ETFs, may be a little bit of a more straightforward way to own the asset.
11 years later, my man, you are still rocking and rolling. And if Bitcoin hits 1 million, we'll do this conversation again. But I hope we get to do it many times between now and then. My special thanks to Gil Luria. Gil is head of technology research at DA Davidson. Gil, thanks a lot. Great to have you today.
Thank you.